March 6, 2026. This is the S&P 500 E-futures mini on the 2000 tick chart using indicator 8. What the chart looked like today. Even before the market opened, it dropped about 100 points in the pre-market, and right at the open, it continued on this really big yellow down channel. It looked like it bounced and it hits this really big sideways consolidation. Now, I was playing this smaller gray trading range, but I also thought there might have been a potential support, but it seemed like it reacted off this bottom trading range a little bit better. And toward the end of the day, it sold off, bounced, and it just kind of went sideways again. Now, this is a particularly terrible trading day for me, although I look back and as I was going through the chart and in real time, it is actually a decent, there's some decent setups in here. The stupid thing is I took two really bad trades that, of course, ended up losing. And it's a little frustrating because I look at it and I should have known better, and I should not have just jumped in on those because there were better setups waiting. And I'd been more patient, I would have been able to maybe take some of those. Because after my second trade, I just kind of hung it up, and I said, okay, well, I'm not definitely taking any more trades today. I just recovered from my two losses, I think, earlier this week. Got traded better, got my losses back to pretty much a little over break even, and then today I set myself back again. So that was a kick in the pants. The only economic data that came out today was around 5:30 Pacific Standard, which was the unemployment numbers. And I think like the hourly earnings and like non-retail sales, non-farm, et cetera, came out about right here where you see this big drop that occurs. So going into the trades, pre-market, it looked like there was a higher low here. If this set up in the regular trading hours, this probably would have been a possible trade. Looks like it's down. Say first entry long pullback, second entry long, and higher low here. Looks like it was moving sideways, then it broke. I also thought this probably would have been a possible trade if it was in the regular trading hours. So localized low, say first entry short, second entry short, push back up, flush down, a lower high here with EMA acting as resistance. Hits another sideways consolidation. There's this big drop because it's right when the news came out. And this second entry short looks really clean, except it's hard to trust because this is about 3 minutes after the news came out. So I just marked it just for myself to see. So at this point, right before the open, I established that prices are probably following this yellow down channel, which fit really nicely. Is one touch, two touch, three touch, four touch confirmation. Matches on the bottom side pretty well. There's a small breakout here, but it didn't push prices back up to the high side, so it went sideways. So I didn't really count this breakout here on the low side to be that critical because it is relatively shallow to the size of the channel. So it's moving sideways. It looks like it was in a trading range. It's a failed breakout here. It's a localized high, created first entry long pullback, second entry long, bouncing off this low side of this range. Also a localized low, first entry short pullback, second entry short. I actually thought this is a possible trade because it's getting rejected off this confirmed yellow down channel support. EMA is starting to drift sideways, but it does have a bearish pull to it. And I thought this failed breakout might create a failed breakout on this side. It failed here, but this could be the second attempt. And since this bounced off the low side of the range, pushed pretty close to the highs, you could argue that this is not technically touching, but good enough for a trade. And it engulfed the last three previous bars. There's really strong push down in the close. Now, to take something like this, you still have enough room for a quick scalp here. So I thought this is a possible trade. And I don't think you necessarily have to wait on it engulfing. I don't know if you would have gotten it though, because if you dropped it one tick below for sure, but if you try to do what I do and drop it right here, this happened pretty quickly and flushed down. Then prices continue moving down this yellow down channel, staying within. It fails to make it to the other side, kind of break to this orange down channel, test the low. Then it makes first entry short, second entry short. There's no trade here. It's just too tight, too congested. Pushes up, breaks out of this yellow down channel again. Now, when I see this in real time, I'm not 100% sure if prices are going to test the low now because it's failing to hit the bottom of this yellow down channel. It looks like it's starting to curl back up, but I wouldn't put it against the fact that prices could still move back down. Starts moving sideways, so not just sitting and watching carefully. Break to the high side and pushes down. So technically here, this has tested the low of this yellow down channel. So down channel has played out. Looks like those two legs down starts to reverse. You technically have a higher low here, but it closed below the EMA, and I'm not willing to take a trade like that yet. You do have a first entry short, second entry short. It's a bad signal bar. Pushes back up. You technically have a higher low here with a failed second entry short, but this just feels congested. Just came from a doji, and prices are just kind of side by side. You have a little range, a little congestion area here. Break of this green up channel has tested the highs, reversing back down. And I want to remark that I have in my notes that as I was watching this, I'm thinking like there's a lot of whipsaw, a lot of quick reactions up and down. You have these big candles, and ATR was pretty high today. I mean, relatively speaking, but it just felt a little riskier, and definitely the stop losses would be larger. And that's certainly the case today when I lost both trades I tried to take. So it hits the localized low, reverses up. It's a first entry short. Technically, you have a second entry short. There's not a good signal bar, nothing here. It starts moving sideways. You have a localized high, first entry long pullback, second entry long. This is also a bad signal bar, also moving sideways. You could argue for a triple test, but it didn't quite touch the EMA. And the signal bar close it doesn't feel very strong. Then it breaks down below, kind of pushes back into this range here. Then it finally breaks out below and it pushes up. I saw one leg. It looks like it was just sideways consolidation. It pushed down, and then I was expecting a second leg up, and it does make the measured move. So I'm going to go into kind of right over here. So it pushes up. It looks like a spike and then a shallow channel. No clean second entries right now. This is the trade that I took. It was a long, and this is my thinking at the time. This yellow up channel doesn't exist. I drew this spike and then a channel here because I wanted these touches to match or at least align. And so I did find if I start to line my channel, my pink up channel right here, one touch, two touch, three touch, four touch, it looked like it fit pretty well. High side's a little bit debatable, but in this case, I'm looking for reasons to go long. So I'm looking for key entry points that support a long. And so this is the fourth bounce. It pushes up and comes back down. This sets up for my bad trade. It bounces off the EMA. I'm expecting this break of this pink up channel to test the high. This signal bar, first entry long, pullback. You have a second entry long right here, pushes back. I anticipated a higher low, so this is what I see in real time. It's a bullish bar, bouncing off the red up channel, and I thought, okay, I want to jump in on this trade. This resistance is going to push up and give me my 6-tick scalp. I enter right here. It opens, pushes up, fills me, flushes down, stops me out. My stop was below here. So here are all the things wrong, at least that I know of. One, okay, if I believe this red up channel is in play, this isn't a very good signal bar. It's far from the EMA. So that's one thing that's wrong. Second thing that's wrong is clearly this range doesn't exist yet, but there is some kind of resistance being respected here. There was a high here, and then a lower high, and then another lower high. So why would I think that it's going to necessarily push up? There's not enough going for it. The other thing is it made clearly a measured leg up. So prices are respecting this resistance area. So there's another reason why would I take this trade? The third thing is I kept my stop loss below this candle. As you can see, it got stopped out. If I was trying to take the appropriate loss, this is a decent stop to take. I noticed that if I kept my stop loss below this candle, I would have survived. But I thought about that as throughout the day, and I thought actually that's not the right way to think about it because this is clearly the localized swing low. So let's say this setup was actually pretty perfect or it was proper, then the stop does go below this candle. To put it below this candle, it doesn't make any sense. If I didn't want to keep it below here, the next obvious space would be keeping it below here. But this risk to reward going for 6 ticks, I would have to pretty much drop it, not only just 10, but like 15 points. Keep it, excuse me, drop it below this guy, not this guy. So it'd pretty much be a 10-point risk for a 1.5-point reward. And that is way, way negative on the risk to reward ratio. That doesn't make sense to take this trade. So even if this set up nicely, it's a big risk that shouldn't have been taken considering all the other factors going against it. So this was a loss for good reason. There's no really clean way to I should have taken this trade because it shouldn't have taken place. Starts moving sideways, it bounces up. It starts moving outside this red up channel. That's when I established this yellow up channel because it looked like maybe this yellow up channel is in play. So one touch, two touch, three touch, and it also fits a little bit better on the high side now. So I was playing this yellow up channel. This red one, I wasn't playing anymore. It broke through the measured move. And yes, it did annoy me supremely after it pushed down and reversed up. And that the time I was thinking, should I kept my stop below here? And as I mentioned, keeping the stop below here doesn't make any sense. If I wanted to keep the stop lower, the next obvious place would be here, but the risk and reward would not have justified taking a terrible setup like that. Prices then continue moving up. Looks like it moves up to the high side, break of the high side, and it's a first entry long, pullback, second entry long, and this sets up for my second trade. And this is also a very terrible trade. There was a failed break-in on this side. This is what I'm thinking at the time. This orange down channel is broken and tested the low. Now, I'm anticipating a strong reversal, but why am I anticipating that? I was anticipating prices to move back up because it broke out of this yellow up channel and it's going to test a high. But it just broke out on this side. And I've said it before, and I've noticed it before. When there's a break on this side, it's a little, I have to be very extra careful taking a second entry in the direction of the previous bias. So the previous bias is going up. There's a break on the high side. So there's a corresponding break on the low side. I need to be extra cautious, assuming that prices are going to continue back up now because this high side, when it breaks on this side, as opposed to this low side, this could account for traders thinking it's already achieved the extreme because this channel is a little bit suspect now. If this channel prices fit in it really nicely and this didn't exist and there was a break on the low side, there's a better probability prices are going to move back into range. But when it broke on the high side, which is on the same side as the original bias, I had to be extra cautious. So taking this trade doesn't make any sense. So I saw a first entry long pullback, second entry long. Of course, this is all in hindsight. Me, I'm thinking, well, broke the orange, tested the low, downward momentum has played out. Obviously, it's going to move back up. So I saw this. I said, oh, cool, higher low. It's time for me to recover this loss, or at least try to bring the loss down a little bit lower. Entered right here, which is foolish because I didn't wait for this red candle to confirm it's a higher low. Clearly, I marked it as higher low because that's what I thought at the time. It proves to be not a higher low because it broke even lower. Stops me out because my stop is one tick below this guy. And again, even if this was a perfect setup, my stop actually could be one tick below this guy. So this all around was a poor trade, poor discipline. It didn't follow anything. This is not even amateur hour. This is a bogus setup that I should just left alone completely. And I'm gonna say that yeah, this is a lapse in judgment, likely affected by the loss here. But as soon as it stopped me out, I immediately thought, okay, I need to stop. I know I'm frustrated and triggered. There's no more. I kind of used up all my free passes. I can't trade anymore for today. But I did watch the rest of the charts. But this was definitely supremely frustrating because even this signal bar, which if I assumed it was a higher low, didn't even close above the EMA. So I needed every good reason to take the trade. I avoided a whole bunch of them. The only thing I was going off of was the break of the orange down channel. It's going to obviously reverse, which was not justified in anything. Prices then move down, breaks, and starts reversing up. This great range doesn't exist yet. Creates a new low, first entry short, pullback. You have a second entry short, but also localized high. First entry long pullback, second entry long. I call it an almost trade because it doesn't touch the EMA. It does feel like it's floating in the middle of nowhere. I didn't quite have this range established yet until more price action panned out. But even then, it feels a little dicey because it's just kind of bouncing off of nothing. You could argue for a triple test, but the first touch, well, actually, I would say this is like kind of the first touch. Two subsequent touches are just too close to each other. That makes me feel a little bit weary. Prices move up to the high side. When it moves up to this high side, that's when I established a potential resistance area because it looked like it tried 3 times to break through, it couldn't. And then I was wondering if this, actually I had this blue line drawn first, so my range was actually wider. I ended up keeping the blue line and dragging it up and establishing this gray region as the trend trading range. Prices move down, it bounces here. So this is actually where I established the bottom of the potential range because I thought this might have been a failed breakout. It looks like it's respecting this pretty well. Localized high, moving down this orange down channel. First attempt down, this could be the second attempt. It's also localized low. First entry short, second entry short. This is a lower high confirming the visual first entry long, second entry long, second entry long failure. I thought this is a possible trade. Not quite a triple test, but I do like that this is engulfing the previous bar completely. It is a little bit more aggressive because you have to take it, in my opinion, on the engulfing, because seeing this in real time, you're aware that there's some kind of resistance here. And when it pushed down this far, I wouldn't wait for the close to try to take this trade. I would have tried to take it on the engulfing. And I think that's the way it would have been, but it's definitely aggressive because this bar is huge. This is a 34 tick bar. Prices move down, bounces off here, pushes up. It looks like it got a rejection off this potential channel. New low, first entry short pullback, second entry short. The second entry short I thought is also a possible trade. It's a rejection off this third touch, fourth touch confirmation of this yellow down channel. This bar engulfed the last bar and pretty much engulfed this bar completely. It's a very decisive move down. I thought there was enough momentum for a second or a quick scalp because this EMA is pretty much coming up right against this yellow down channel resistance. So I thought this two key entry points plus first entry short, second entry short, strong push down. If you didn't take this trade, I thought another setup presented itself shortly after, which is this lower high. Kind of confirms the second entry short, first entry short, second entry short, lower high. Prices look like they're moving down. This range, when I established it, I wasn't too sure if it was actually here or actually lower here. Eventually I dragged it up to here because it looked like it fit a little bit better. And when it broke, well, at the time when I saw this in real time, I wasn't sure it was actually here, but when it broke through, I thought this strong engulfing bar, like this one, might be a possible trade. Pushes down, bounces. So with this bounce confirmation, I'm pretty much playing this gray channel now, with this treated as a fail breakout. Prices continue moving. This just gets really, really congested. It almost looks like it's widening. It's almost like creating a bigger and bigger, it's wedging out. Pushes up to the high side. Rejection comes back down. So with this touch rejection, I believe this is the range that's in play. Anytime prices come up to here now, because you have 3 clear touch and failures of trying to break through the tie of this range. Low side of this range is 1 touch, 2 touch, 3 touch. So this looks pretty solid. It looks like this is the channel to play. I'm expecting prices to come back down to here. So it starts reversing. It's localized high, first entry long. Technically, I have a second entry long here, but as I said, my bias is that prices are going to come back down because I also saw one leg pull back, and I'm thinking a measured leg back down to here, which is pretty much close to the low of the range. So my expectation is prices are coming down, but I didn't expect this big push up here, and this is a huge candle. It creates a triple test second entry short. So new low, first entry short pullback, second entry short. This technically doesn't touch the tie of this range, but depending on how you drew it, if you crunched it down a little bit, you could have this touch, but I thought that was good enough. Also triple test. As I said, I'm expecting prices to come back down. It failed to hit here, and I only really thought it was a possible trade after I saw the close of this candle. Looking at first entry short, pullback, second entry short, you'd have to be kind of quick. It's a decent signal bar, but although it's a possible trade, I decided if I was trying to trade this, I would try to look for a lower high. But of course, you don't get a lower high, it kind of pushes back down, makes the measured move. pushes down, hits the low of this range now. Possible first entry long pullback, second entry long, called an almost trade. Actually, this shouldn't be an almost trade. This should actually be an actual decent trade. Second entry long, because it'd be at the bottom of the range. This is a hindsight correction. I don't know that I would have thought about it like that in real time. I think when I saw this measured move, because there was a lot of measured moves kind of obeyed today, I thought, well, it's probably going to reverse or it might push back down. So actually, breaking this orange down channel, tested low. Okay, yeah. So actually, in hindsight, with better thought, uh, more clarity, I think this is actual possible trade. Prices move up. There's a higher low here, but if you didn't enter here, I'd be a little reluctant to enter here. Push down, localized high, first entry long, pull back, second entry long. Second entry long hasn't failed yet. It's also a new low. First entry short, second entry short. It all depends on what happens next. But looking for a failed second entry long is pretty close to this potential support area. And if you're looking for a second entry short, you have two key entry points. EMA isn't super reliable, but you'd be selling into this support area, which admittedly looks very reliable right now. So I call it an almost trade. You don't know it's going to do that. Pushes the low side, starts reversing, first entry short, kind of hits sideways consolidation. You also have a new high, first entry long pullback, second entry long. This yellow up channel doesn't exist, so the only thing you have going for it was potentially a triple test here. The triple test, EMA doesn't really help. It just kind of felt a little orphaned, like an orphan setup. And you don't get a higher low before prices make a new high. So now this is where I established this yellow up channel trend line, and I created it into a yellow up channel itself because the trend line fits decently well. And then I expanded it to make it into a channel, hoping that I'd get some more confirmations here. It's a little congested. It does have a touch confirmation here. Breaks to the high side. Again, it's respecting the high of this range, which I like. It actually creates a lower high here, but there's no trade for me. Again, another lower high. It kind of is reminiscent of the bad trade that I took here where it created lower highs each time. But this is now even more pertinent because it's the high side of this range where this resistance lives. Then it finally flushes down. So it's kind of obeying price action pretty well. This is obeyed really well, this trading range high side, because if you, for whatever reason, you shorted your stops here, you would have to sit through this, probably gotten out here, but if you're going for a big move, you'd survive this, and then you'd probably be able to catch a bigger move here. But of course, that's kind of not how I'm trading, and I was already hung up my trading for the day due to my two losses. Pushes down. Here I established this orange down channel. It's a new low, first entry short pullback, second entry short. I mean, it didn't break above, so it's not a clean second entry short. It does give you a lower high here, and I actually thought there's another possible trade. So it's a localized low, first entry short pullback, second entry short, push up, break. It's pretty solid, good signal bar. Pushing back into this orange down channel, went to the high side, to the low side, to the high side, pretty much the low side here, back to the high side. Looks like there's enough for a quick scalp, and it looks like it did follow through. Pushes down. Now it just gets sideways again. Localized low, first entry short. Technically, I mean, this is inside to this, so I actually just saw it as a more visual first entry short. You have a second entry short failure here, though, but it felt like you're operating in this potential range area. So it just felt a little bit harder to trust this trade because this I thought could have turned out to be a fail breakout with a continuation to try to test the low of this orange down channel, which is up. It just gets congested here. It's a first entry long pullback. You technically have a second entry long here. It's bad signal bar. No real setup here, which is looks like it's ranging. The fail breakout here, I'm expecting it to break here on the low side. It doesn't happen. It starts kind of getting choppy and messy. Hits the high side of this range. So again, I'm paying attention. I'm thinking it would a possible short entry setup here. You have a localized low, first entry short, second entry short, technically a third entry short. You don't get a lower high and it just kind of pushes back down. So this for sure is a very reliable trading range now with this at the high side. Pushes down this orange down channel. Localized low, first entry short, second entry short. It's an almost trade because it doesn't fit clean. I mean, it does have an EMA rejection, but the EMA itself isn't reliable because you can tell prices are both above and below. So why would it suddenly respect this as resistance? Pushes down to the low side and starts breaking through. So this is a very decisive break. I was wondering, this previous resistance, would this actually hold and actually yield anything? Because this has a fail breakout moving back in, because this could all be inside a larger trading range defined by the highs here and the lows here. So I was wondering if there's going to be a fail breakout here for price move back in. And it kind of does that, but it turns out to be like a breakout pullback and it continues downward. So where I established this larger yellow down channel, but no trade setup, the localized low, first entry short, technically have a second entry short here, but no clean setup. Got a lower high here, but it just feels a little bit side by side congested, plus the time of day. Pushes down. EMA is starting to act like a little bit of resistance till you get here and it flushes down. Now it's just getting noisy and it gets pushed into the end. So this is the last 10 minutes. Now, I do know throughout the day, listening to the news wire, there's all kinds of news coming out from, well, of course, Iran and the administration saying what they're going to do, and then just updates on what's been happening over in Iran. And I think also the outlook for the economy has kind of soured because the unemployment claims was a lot lower than everybody expected. I mean, a lot more negative than everybody expected. But yeah, overall, the trading, I wouldn't necessarily say it was harder. It was just I was not on top of my game, and I took two very terrible trades that definitely set me up emotionally for the rest of the day. And well, for my rules, if I took two losses like that, I just can't take any more trades because I start questioning my pretty much my mental capacity and my mental read. So it's unfortunate because I think today could have been easily a green day if I just been more patient and I don't know, just didn't get triggered. So hopefully that was helpful.